Where's my, I didn't share. Okay, here we go. Here we go. Okay. Accounting for material. We are going to talk about objective of material handling or recording over here, right? And overall speaking, as far as the objective for the material handling or the recording is concerned, basically we have to start and talk about why do we need to have the documentation for all the material that we handle within the organization, and what's the point of having the documents and the proper recording for as far as the material and everything is concerned, right? And we have already talked about this one, and we have talked about the purchase cycle as well, because we have to have a proper record and proper track for whatever the material we are having and we are issuing for as far as for the production is concerned, so that at the end of the day we do know that how much was, like, material was purchased during the period, what is over there in the stock, and how much has been issued to the production department and all, so that if we are ordering the material we don't end up ordering extra. And if we have the material with us in the stock, at least we should know that how much is over there in the stock. And similarly, we can, like, have a control over the total amount of the material that we have in the stock as well, so that, the effective planning in the case of the finance, in the case of the amount of the material that we have with us and everything, it can be properly maintained as well, right? Because if we kind of get out of stock or something, obviously we'll end up spending extra onto the material is concerned. And similarly, if we end up maintaining high level of the material or the stock is concerned, obviously this is not going to be a good sign as well, right? So we have to kind of sort of create an equilibrium, overall speaking, between the material that we have and how much do we need, right? There's no point of maintaining the extra material and all. Okay, now when we talk about the material overall, no, the point is, what we have to do over here is we are going to talk about as far as the objective of the material handling is concerned. Now, we are going to talk about two objectives. One is to reduce the overall inventory related cost, and then to avoid the stock out cost, right? So we have these two objectives. One is called as to reduce the overall inventory related cost. Second one is called as to avoid the stock out cost, right? Now, as far as the organizations are concerned, we have two types of organizations basically. Okay. Organization, we have resellers, we have manufacturer, manufacturers over here, right? Now, overall speaking, we have two types of the organizations. One is obviously is going to be the manufacturer, and then one is basically going to be the resellers over here, right? So overall speaking, basically what we have to do is we have to talk about the total inventory cost, right? So what is the inventory cost? That is what we have to talk about, right? Now, obviously, when we go and we talk about the inventory cost, that is obviously going to be the purchase cost, holding cost, and then we have the ordering cost, right? So basically, the types of the costs that we have are the purchase cost, ordering cost, and holding cost over here, right? Now, as far as this purchase cost and everything is concerned, let's just talk about these over here. One is ordering, one is holding, and then one is purchase cost. Purchase cost is the total cost of purchasing the inventory during the year, right? So purchase cost is the total cost of purchasing the inventory during the year. That is something we are going to call as the purchase cost. Holding cost, on the other hand, is going to be the annual cost of holding an item of inventory in stock, right? So the holding cost, the cost of holding an item of inventory in the stock is going to be called as the holding cost. And then the ordering cost is the total cost of orders made during the year to get inventory, right? So ordering cost is the total cost of orders made during the year to get the inventory. That is something which we are going to call as the ordering cost over here, right? Now, moving it from here, if we talk about the purchase cost, we said that this is going to be the total cost of purchasing or the annual cost of purchasing, like, the whole total inventory item with you. So basically, the formula for this is going to be annual demand multiplied by per unit cost over here, right? So if we have to calculate the purchase cost, I mean, the formula for the purchase cost over here is going to be the annual demand multiplied by the amount per unit over here. So we'll get the total purchase cost over here. When we talk about this holding cost, the formula for this is basically average inventory multiplied by cost per unit, then cost per unit per annum, right? So this is the formula for as far as this holding cost is concerned, right? The formula is average inventory multiplied by cost per unit. Now, what is this average inventory and why do we have to take up as far as the average inventory over here in the formula? When we ask this question, the answer to this is simple because, you know, exactly to identify which inventory item do you have at what time, this is gonna be difficult. I mean, if I want to check that what is the exact inventory item I have today, that is definitely going to be different somewhat, which I'm going to have tomorrow because there is a continuous production, there's a continuous sales as well, right? At any given point of time, it's not necessary, and normally it is not there as well that we are going to have the exact same level of inventory that we had yesterday, we have tomorrow, or it's not possible that on every Wednesday we are going to exactly have this much of the inventory with us. Similarly, it cannot be possible by stating that on the 6th of every month we are exactly going to have this much of the inventory with us, right? Technically it's not possible, right? Technically it's not possible for us to identify that. So, over here at the end of the day, in order to get the things done, and in order to get along and everything, now what we do over here, we simply make up this formula, and the formula is simple, that we have this average inventory, right? We take up the average inventory over here, and when we talk about this average inventory, now this average inventory is going to be the quantity ordered. This is going to be quantity ordered divided by 2. That is how you calculate your average inventory over here, right? Because at any given point of time, you cannot have a fixed amount or a number of the inventory with you. Every time this is going to be different. I mean, every day at 7, if you try to check, definitely for sure your inventory levels are going to be different because there is a continuous production, there is a continuous sale, right? You are continuously you're using your inventory. Similarly, continuously the finished goods are being made, and similarly the sales are over there as well. So it is really very hard for you to have one final figure that this is this much of the inventory is what we have all the time with us. Every time there's going to be a fluctuation. At times you will have more inventory, at times you will have less inventory, at times you will have kinda in between somewhere, right? So in order to overcome this and all, we simply take an assumption that we take up the average inventory over here in order to get the idea and in order to get the formula done and everything. Right now, moving ahead from here, if we talk about as far as the ordering cost is concerned, the ordering cost is annual demand divided by quantity ordered. The formula is annual demand divided by quantity ordered. You get number of orders. Like for example, in a whole year, your annual demand is 10,000 units, right? And every time you order 1,000 units, so 10,000 is totally required. You order 1,000 units per order. So how many orders are going to be there in a whole year? 10,000 divided by 1,000, right? That is what you're going to do, na? I mean, if you need 10,000 units and every time you make an order, you place the order, say in case for 2,000 items, right? On every ordered you item, you order 2,000 units, right? So 10,000 divided by 2,000 is 5,000, right? So every time you are going to order this, in a whole year, you will order it for 5 times, right? Because every time you are getting the 2,000, so in total in a year, you will have 5 orders, right? So these number of orders are going to be multiplied with cost per order. So you'll multiply them with the cost per order, right? So you will have your total ordering cost over here, right? Okay, I hope it's clear to you. Now, let's just move forward and have an example. Suppose annual demand for a product is 50,000 units. Purchase cost is, or purchase price, let's just write it, price is $10 per unit, right? And the company has to incur $3 per unit as holding cost per annum. The cost of placing an order is $500. Currently, the company orders 15,000 units per order required. Calculate total cost of inventory. Okay, now the question is, suppose annual demand for a product is 50,000 units, purchase price is 10 per unit, and the company has to incur $3 per unit as holding cost per annum, right? So $3 per unit is going to be your holding cost per annum. Now, the cost of placing an order is 500, and currently the company orders 15,000 units per order. So you have to calculate the total cost of inventory over here, right? Now, the formula is purchase cost, holding cost, and ordering cost, right? Now, for the purchase cost, let's see, we have annual demand of 50,000 units, right? These are going to be multiplied with the cost per unit, that is $10. Holding cost, we have over here quantity order divided by 2 because we have to get the average inventory over here. Na? So average inventory, the quantity ordered, we are currently placing 15,000 units, right? Divided by 2 multiplied by, the company has to incur $3 per unit as a holding cost. So $3 is going to be over here. And then the ordering cost, annual demand 50,000 divided by quantity ordered multiplied by cost per order. And the cost of placing an order is 500 over here. Right? So this is what we are going to have over here for the ordering cost. Now, 50,000 into 10 is 500,000. 15,000 divided by 2 is going to be 7,500 into 3 is 22,500. And then 50,000 by 15,000 into 500, we get 1667. Right? So we have a total cost of inventory at 500,000 plus 22,500 plus 1667. So that's going to be 524,167 over here, right? So overall, we have this total cost of inventory standing at 524,167 over here, right? Now, we have this objective 1 for the inventory. And the objective 1 is to reduce the overall inventory related cost over here, right? When we talk about this objective now, overall the objective is that we have to reduce the overall this total cost of inventory that we have over here. Now, one thing is, let's stop buying extra. Let's cut down our, as far as the units which we are buying will reduce our cost. As soon as we cut it down, we reduce our cost, automatically the total cost is going to be reduced. But this reduction, if we do so, this is also going to cost us our profit as well. I mean, there is going to be a reduction in the profit as well now if we try to do this over here, right? So this is not an appropriate one, right? Basically, what we do in trying to reduce the overall inventory related cost, we try to work on to the holding cost and the ordering cost over here. These are the two costs on which, you know, we try to work, and we try to work around, as in a sense we try to reduce it up, right? So we try to create a balance between the two in order to reduce the cost. Just give me a second, we are resuming, just 1 second only. Okay, so we were talking about the objective one, that is to reduce the overall inventory related cost, right? And the inventory related cost, basically the rocket science is to create a balance between the holding cost and the ordering cost. And in order to create the balance, we have this formula over here been called as economic order quantity or the EOQ. Basically, what the EOQ does is it tries to create a balance between the holding and the ordering cost, and the formula is 2 into annual demand into ordering cost divided by holding cost, right? And this is the formula, right? And over here, AD is annual demand, OC is ordering cost, HC is holding cost per unit per annum. Ordering cost per order, right? So economic order quantity basically gives us the number of units that we should order per order that are going to reduce our cost. Simple. No other rocket science over here, right? The simple thing is that this is the approach via which we will have a reduction in our cost because of the way we order, right? So now let's just apply the COQ on the same very formula or the same very example that we have been provided with over here. So over here, the EOQ is going to be 2 into annual demand. The annual demand is 50,000 over here. Into ordering cost is 500 over here. Holding cost is $3 per unit over here, right? So we have this thing as a whole under root, and then we have this under over here as well, right? So over here, if we try to solve this up, 2 into 50,000 into 500 by 3, we get 16,66666, right? So this is gonna be over here, whole under root. And then our EOQ is going to be 4082. So 4082 is going to be our EOQ, right? So EOQ means that this is, according to the formula, if we have this scenario with us where we have a holding cost of 3, the ordering cost of 500, and the purchase units over here, the annual demand over here for the 50,000, we should order 4082 units per order. And if we order 4,082 units instead of 15,000 units, right? If we order only 4,082 units, we are definitely going to have a reduced cost, right? So let's just try it. Let's just try this up. Total cost at EOQ. So total cost at EOQ, again, we have this formula. I'm just going to copy this up. Here we go. So holding cost is, we are just ordering 4082 units over here, right? And over here, we are going to divide it with 4082, right? So if I try to solve, this is 500,000. This is 4082 divided by 2 multiplied by 3, 6123. And then this is 50,000 by 4082 multiplied by 500 is 6124, right? So we have a total cost at EOQ at 500,000, 6124, 6123. That's going to be 512247. So we have 512247 over here, right? So now this is the total cost at EOQ. And I am going to compare it with this total cost of inventory that I had, right? I'm going to compare it with this. So this was 524, now this is 512. So my total saving at EOQ is total cost at EOQ minus total cost at current order level, right? Or we can turn it around because by this we'll have the negative answer. That's going to be total cost at current order level minus total cost at EOQ. So at the current level, this is 524,617. 524,167 minus total cost at EOQ is 512,247 over here. Right? So total saving is 524,167. 11,920. 11,920 over here. Right? So our total saving over here is going to be 11,920 over here. So basically the rocket science is, the point is simple. The point is simple that if I order at EOQ, I just change my order pattern via EOQ. This is simply going to reduce my, overall inventory related cost, right? Now, basically, EOQ said that you have to reduce your inventory level from 15 to 4,082. You have to reduce your inventory level now from 15,000 to 4,082. Then you are going to have a saving, right? Now, if it means that we have to reduce, this is currently standing at 4082, right? 4082, yeah. The current order size, I mean, at the EOQ, that is at 4082. So if I drop my cost from 15 to 4,000, this goes to 4082. How about if I drop my order size more? I order lesser units. Let's see what cost do we get, because if we are, the pattern is if we reduce the current order size, the cost is saved. So let's just try to reduce it more so that we can save more. So let's calculate total cost at the order size of 2000 units. Let's calculate, right? Let's calculate the total cost at the order size of 2000 units over here. So we again have this formula: purchase cost, holding cost, and ordering cost, and this is going to be the same. So this over here are 2000 units, and then this over here is 2000 over here. So we have this at 500,000. This is going to be 1,000 and 3,000. This is going to be 25,000. 25,000 multiplied by, no, not 25. That's going to be 25 into 500. That's going to be 12,500. So total cost is going to be 500, 512, 500, 515, 500. See? So my total cost over here goes to 515, whereas the total cost at EOQ is on 512. So what does it mean? I order above the EOQ, my cost is on the higher side. I order less than the EOQ, my cost is on the lesser side, right? In both cases, if I deviate myself from the EOQ by ordering more or by ordering less, by ordering more or ordering less, no matter what, my cost is going to increase. So the best is if I exactly order, according to the EOQ. If I order exactly according to the EOQ, then that is something where I am going to have my exact perfect cost, right? If I go up or I go down, my cost is going to be disturbed, because my total cost is going to be disturbed, because it will start to go up again as well, right? So this is what basically the concept is overall. Now, let's just move forward. and have another example. Now, let's say we have annual demand 150,000 units. We have purchase price $6 per unit. We have holding cost $4 per unit per annum. We have ordering cost, that is $750 per order. We have current order size 40,000 units required. Calculate total cost at current order level. Calculate EOQ. Calculate total cost at EOQ, and then supplier has offered you the following discount options. If you order 0 to 41,999 units, you get 0% discount. If you order 42,000 to 54,999 units, you get 2% discount. If you order 55,000 to 79,999 units, right, you get 5% discount. And then let's just set a bit. And then if you order 80,000 onwards, you'll get 8% discount. And the requirement is evaluate these discount options and advise should they be chosen or not, and then why. Now, point A, total cost at current order level. We have the formula purchase cost, holding cost, and ordering cost. Now I'm going to copy this out. We have annual demand of 150,000. The price is 6 per unit. We have the current order size of 40,000 units. And the holding cost is 4 per unit. Now, then we have 150,000, 40,000, and the ordering cost is 750 per order. Right? So 150,000 into 6 is 900,000. Holding cost is 40,000 by 2 into 4 is 80,000. And then 150 by 40 into 750. We get 2812,500 or 28, sorry, nah, 5 not 500, 2813 over here. Right? So total cost at current order level $982,813. Right? Then part B, EOQ. EOQ is 2 into annual demand into ordering cost divided by holding cost. So 2 into annual demand 150,000 into ordering cost 750, holding cost is 4, right? So if we solve, we get EOQ at 2 into 150, 123 into 750 divided by 4 whole under would be 500 units. So we get 7,500 units over here, right? Then C, total cost at EOQ. We have this formula. I'm going to use that. This is all same. Now the EOQ is 7,500 units only, right? So over here, we are going to divide it with 7,500, right? So that's going to still be the same 900,000. Holding cost is going to be 7,500 by 2 into 4. That's going to be 15,000. And then over here, it's going to be 150,000 by 7,500 into 750. That's again going to be 15,000, right? So total cost at EOQ is 930,000, right? And then total saving at EOQ is, this is 982. Compare these two. Compare these two. This is 982. This is 930. So I believe this is going to be 52,000 something. Yep, 52,813 it is going to be the total saving at EOQ, right? So this is the saving portion over here. Done. Then moving ahead from here, now we have the discount now we have the discount options. The discount options, right? Now, first thing first, 2% discount at the minimum size of 42. Now, normally we have seen this thing over here in the trade that if we order in the bulk and if we order in some big quantities, normally we are offered a discount from the supplier as an attractiveness, right? So basically the supplier offers us attractiveness that if we order more, we'll get like per unit discount as well. So the question comes that if the discount is available, so should we go for the discount or not, or should we avail the discount or not, right? So this is the point that is gonna be off under discussion over here, that how to evaluate the discount options, because obviously speaking the EOQ has given us a number for the order size and that we should order in a particular way or a manner or in a pattern. So technically we will have to deviate from the EOQ. So the point is again the same, that should we deviate from as far as this EOQ? I mean, is it good or is it wise to deviate it from here or not, right? So this is what we have to evaluate, right? So we are going to look at the discounts one by one and we'll see that if it makes any difference on our total cost or not. Obviously, if our total cost is reduced, then we are going to accept the discount. Otherwise, we are not going to accept the discount over here. Okay, so the discount option, 42,000 units have to be ordered. For order size of 42,000 units, we will get 2% discount. So our purchase price will become $6 minus 2%, that is 5.88, right? So let's just copy this up whole thing. There we go. Now this is going to be at 5.88, right? Holding cost, we will have to increase our order size to 42,000. And over here, that's going to be on 42,000 as well, right? So this is going to be 150 into 5.88, 882,000. This is going to be 882,000 over here. Then this is going to be 42 by 2 into 4. This is going to be 84,000. And then this is going to be 150,000 by 42,000 into 750. So this is going to be 2679, right? So our total cost at 2% discount will be 882, 84, and then 2679. This is going to be 968,679. 968,679, right? So if we have this cost with the 2% discount, overall speaking, over here, the total cost at EOQ is 930, right? So overall saving will be negative. This will be negative 38,679, right? So the saving will be negative 38,679 over here. So it's going to be a loss over here, right? Done? I hope it's clear. Done? Just give me a second, please. Okay. Then moving ahead from here, this is the 2% discount. Done. Then the second one, this was for the first one, right? Okay, now second one is 55,000 units for 5% discount. So for order size of 55,000 units, we will get 5% discount. So our purchase price will become $6 minus 5%, and that is 5.7, right? So formula 5.7, this is 55, 55. So this is gonna be 150, 123 into 5.7, 855. Over here, 55 by 2 into 4 is 110. Then over here, 150 by 55 into 750 is 2045. Total cost at 5% discount will be 855, 110, 2045. 967, 045. So over here at 5% discount, the total cost at 967. So saving will be, that's going to be negative as well because that was 930,000, right? This was 930, no? Yeah. 37,045. Right? Okay. Then we have 8% discount for 80,000 units. For order size of 80,000 units, we will get 8% discount. So our purchase price will become $6 minus 8%. $6 minus 8%. 5.52. So this is 5.52, right? This is what, 80,000? And then 80,000. So this is going to be 150 into 5.52, 828. Over here, 160, 150 by 80 into 750, 1406. So total cost at 8% discount will be 828, 160, 1406, 989,406, right? So saving will be minus the EOQ cost, 59,406 negative. So no discount option should be chosen as the total cost at EOQ still remains to be lower, right? So no discount option should be chosen. Done? Now, let us go over here for a new example. Annual demand. $100,000. Purchase price $10 per unit. Or let's just have it 15 per unit. Right? Holding cost, that is 0.3 per unit per month, right? And then ordering cost 500 per order. Let's just have 450 per order, right? And then parent order size 20,000 units required. Calculate total cost at parent order level. Calculate EOQ. Calculate total cost at EOQ. Evaluate the following discount options. Uh, 25,000 to 34,999. I'm having a 4% discount. From 35,000 to 44,999, I'm having a 7% discount. And then 50,000 onwards, I'm having a 10% discount. Right? Hurry up. Start doing the question for me. Let's see how you start. I'm giving you 5 minutes. Let's just get it done. I'm waiting right over here. If you need any help or assistance, do let me know. I'll take over. But start doing this. Hurry up. Come on. I'm waiting. What's the answer? I'm still waiting. Be responsive, guys. Have you been able to solve it or not? Mihir, Pagwa, Vidad, Yusuf. I need the answer. Come on. I'm still waiting. At least do let me know that if you have been able to solve it or not. I mean, if you're not, if you're stuck or something, then I'll start doing it. But at least do let me know where you're standing. Hmm. Okay, without the saying not finished yet. Okay. Let me just take over. Let's just talk about the requirement number one, that is total cost at current order level. Here's the formula. Now we have 100,000 units, the price is 15. Then we have an order size of 20,000. Holding cost over here is per month. So we have to take it on annual basis. 0.3 into 12, that is 3.6 per annum. I hope you guys have done this. If not, then the whole question is wrong. So the holding cost is going to be 3.6, and then the annual demand is 100,000, and the order size is 20,000 over here, and we are going to multiply it with 450 over here. Right, so this was supposed to be done. So that's going to be 1,500,000, right? Then this is going to be 10,000, then this is going to be 36,000, this is going to be 100,000 by 20,000 into 450, 2250. Okay. Oh, very good. Lots of you have the answers. Pagwa. Okay. Okay. Uh, okay. So which one is the best one? I mean, Mihir, which is the best discount to have? We can't choose all, we have to choose one. So that's gonna be 2250 over here, right? So total cost at current order level is 1538250. Okay, very good. So mine A is same 1538250, right? Okay. Who is stuck in this? I mean, if somebody is stuck in this, I can start doing it, okay? But if you are clear what to do, then we can move forward. I have the answer from the two and I'm waiting for the rest of the two. I mean, if you are stuck, I can solve it, but if you are done, we can move forward. Then we have to calculate total EOQ over here. As for the EOQ, 2 into annual demand into ordering cost divided by holding cost. So whole under root. So our EOQ is going to be 5,000 units, right? So is this, yes, you got the 5,000. Then total cost at EOQ. Here we go. Over here, the order size is just 5,000 units. So over here, 1,500,000. That's gonna be 5,000 by 2 into 3.6 is 9,000. Over here, 9,000 same. So this is gonna be 1518. 1518, nah? Yeah, 1518. Total cost at EOQ. Right? And then you have the discount options, which I hope you can cover up. Done? Okay. Now I am writing another example. This example is going to be a homework where annual demand is 200,000 units. Purchase price $10 per unit. Holding cost $2 per unit per annum. Then ordering cost 700 per order, right? And then current order size 30,000 units. So the requirement is calculate total cost at current order level, calculate EOQ, calculate total cost at EOQ, evaluate the following discount options. First one is 35,000 to 39,999. That's going to be a 5% discount. Then we have 40,000 to 49,999. We have 6% discount, and then we have 50,000 onwards. That is with 9% discount. This question is your homework, right? Homework. Yeah, now W is proper, right? Now, let's have a break. I'm going to come back after 5 minutes and then we are resuming and we'll move forward, okay? Let's have a break. Okay, I'm back. So let's assume now, let's just talk about now the manufacturing organizations. Uh, we have talked about the organizations. We have resellers, and then we have manufacturers. For the resellers, we have EOQ, and for manufacturers, we have similar thing being called as the EBQ. EBQ is called as economic batch quantity. The formula for EBQ is 2 into annual demand into setup cost divided by holding cost into 1 minus annual demand divided by total capacity. And then this whole goes into whole under root. Right? This is the formula over here. Now, AD over here is also the annual demand. SC is setup cost. HC is holding cost, and EC is total capacity. Right? Now, let me just copy up an example. Okay. Now, if we look at the example over here, that is the following is relevant for item X. Production is at a rate of 500 units per week. Demand is 10,000 units per annum, evenly spread over 50 working weeks. Setup cost is 2,700 per batch, and the storage cost is at 2.5 per unit for a year. Now, the requirement is we have to calculate the economic batch quantity for the item X. Now, EBQ is going to be 2 into annual demand, 10,000 into setup cost, 2,700 divided by storage cost, or the holding cost is 2.5 into 1 minus this is the annual demand. Now, annual demand again is 10,000 divided by total capacity. If you look at where is the total capacity, this is 500 now. So we'll have to calculate total capacity over here. Now, we can make 500 units per week, and they are 50 working weeks. So that's going to be what, 25,000? Right, so it will be 25,000 over here. Done. Now, if I go with the formula, this is something like this over here, right? So 2 into 10,000 into 2,700, so divided by 2.5 into 1 minus 10,000 by 25,000. This is where we have to solve the EBQ. So when we do so, when we solve the upper numerator, we get 54 million, right? And then if we try to solve this, first thing over, 10,000 by 25,000. 1 minus answer, that is 0.4, that's 0.6. 0.6 multiplied by 2.5, we get 1.5. Right? So this is going to be divided by 1.5 million. And we do so. This is 54 million by 1.5 whole under root. We get 6,000 units. We get 6,000 units, right? So, as far as the total cost for the batch is concerned, that is going to be the holding cost plus setup cost. Now, again, as far as for the holding cost is concerned, we have these two over here. That is average inventory multiplied by holding cost per annum, right? And then as far as the setup cost is concerned, we have annual demand divided by batch quantity multiplied by cost per batch, right? So over here, holding cost and setup cost. So we have average inventory according to the EBQ is 6,000 by 2 into we have holding cost at 2.5, right? And then as far as for the setup is concerned, we have annual demand. Annual demand is 10,000 divided by batch quantity is 6,000. And then we are going to multiply it with the cost per batch. Setup cost is 2,700, right? So it will be 6,000 divided by 2 into 2.5 is 7,500 plus 10,000 by 6,000 into 2,700. That's going to be 4,500, right? So total cost for the batch is going to be total 12,000 over here, right? So the total cost is going